Welcome back to the Marketing Schematic. Today, we are talking to a longtime partner of Top Floor who serves businesses all over Wisconsin and beyond, and especially in the manufacturing industry. We are excited to have two VPs from National Exchange Bank and Trust to tell us about what they're seeing as far as manufacturing needs across Wisconsin, how they're approaching lending for manufacturers, and we will talk a little bit about what marketing and sales can do to support loan repayment. But first, I would like to introduce our two guests for the show today. First, we have Dave Mohorich, VP of Commercial Lending. Dave has been with National Exchange Bank and Trust for almost 14 years. I think I saw 13 years and 11 months on your LinkedIn. So really close to 14 years. Specializing in small business finance, commercial real estate, financial analysts, SBA lending programs, and most importantly, listening to his clients really well and creating a very personalized approach to their banking needs. We also have Glenn Stadler, Senior Vice President of Commercial Lending and Market Lead. Glenn has over 35 years of banking experience working with mid-sized owner-managed businesses throughout southeastern Wisconsin. Glenn uses a consultative partnering approach to providing financing and cash management solutions for his clients. In this way, he is able to support long-standing relationships by building a foundation of trust. So Glenn and Dave, thank you for being here. Welcome to the show.
Yeah, thank you. Welcome.
Thank you for having us.
Absolutely. So to get started, I think the best place is just talking a little bit about National Exchange Bank and kind of what you do, kind of a little bit about the history. And Dave, we'll start with you for this question.
Sure. So National Exchange, it was founded in 1933. Peter Stone bought into the bank back in 1968. The Stone family currently still owns the bank and operates the bank. They are on their second generation, albeit Peter's still involved day to day and in credit decisions and so forth. But the bank is really a family oriented and localized community bank. We really work with our customers on a personalized level and get to know them, and that's the great part of our job.
What would you add to that, Glenn?
Yeah, so over 90 years old. The bank is very community orientated. So we've got roughly 32 offices. We're the farthest south office in Pewaukee, Waukesha here, and the headquarters is up in Fond du Lac, Wisconsin, and offices in small towns and mid-sized towns in Wisconsin throughout the state, but basically central Wisconsin down to Pewaukee, Waukesha.
And I know that you do both personal and business banking, but I know commercial lending is a big part of the National Exchange Bank and Trust business. So since we're talking about manufacturers specifically, just at a high level, what are some of the ways that National Exchange Bank serves manufacturers?
Sure. So ultimately, every business needs support, whether it's banking from a checking deposit standpoint or lines of credit, term debt, real estate debt. So it's really a full service scenario where ultimately it really is tailored to the customer and to their needs. We also provide trust services as well, which is unique to National Exchange. And that can be helpful from a business as they're going forward with 401ks and or wealth management services.
What trust services? What is trust services?
Trust services would be a fiduciary type scenario where we may manage from a family trust standpoint or manage their internal part of their business.
Got it. Awesome. Very cool.
Anything you would add, Glenn?
Yeah, when family businesses as they get successful, there's instances where they're putting a trust together, and a lot of times, I'm not an attorney, but a lot of times people don't want to name children, especially if there's multiple children in the family, as the trustee. That can lead to challenges. So Our bank comes in, like Dave said, as a fiduciary, and has that responsibility just to carry through on the trust guidelines, kind of the rule book, and then there's no, we're an independent third party just monitoring the wishes of the family.
As far as kind of manufacturing specifically, is there anything that you're kind of seeing right now as big opportunities in the manufacturing industry? Anything you're hearing from your customers and clients when it relates to things like expansion or equipment, or just kind of what's new in manufacturing?
I can take that one. Yeah. I think over, the past maybe 10 years, there's definitely been a shift to, especially in machining, tool and die, which is very active in the Milwaukee market, and Wisconsin for that matter, Midwest. There is, a, I guess, a desire on behalf of original equipment manufacturers, OEMs, to machine parts, for example, that go into OEM products locally here, where 20 years ago, there was more of an app to take that to China or Mexico because the labor was so cheap there. But obviously, with all the geopolitical things that we're all hearing about, there's been a lot more local desire to have those parts and machined and made locally in the U.S. here.
Yeah, we've heard a lot of that from our clients as well over the last couple of years as a kind of a fight against the supply chain issues that everyone was experiencing, seems like since 2019, even 2020. So more localization of different partners to be able to do that type of work for sure.
And the capabilities are certainly here.
Yeah, right.
That was a challenge for those manufacturing clients when a lot of that business went overseas, and it was just tough to compete based on the cost of labor in those countries. So it's good to see it coming back for sure.
Yeah, for sure. Makes sense.
I do think that with the labor shortages and so forth, I do think automation is certainly something that continues to grow. We see it within the manufacturing side as much as possible, where they're really trying to grow throughput from that perspective, fill holes that are not able to be filled with bodies, essentially, and take away a little bit of the repetitive or mundane. Machine can work 24/7 and not call in sick or what have you. So I think that is an opportunity where the businesses are continuing to grow within. I do think I've heard many a time, although not really witnessed this fully, but I think the AI side of things, the artificial intelligence side of things, is continuing to grow too within the manufacturing. I know I've had the opportunity to sit some of your roundtables, and that is certainly a topic that is continuing to grow. Probably very new to us, but not really new to the industry in a sense. So I do think that's something that manufacturers are certainly taking advantage of.
Mm-hmm. Yeah, I'm glad you brought that up, because I was going to say, if neither one of you bring up automation, I'm curious about it to just see if you're seeing any customers, maybe investing in different equipment or things that would kind of support that automation, because that's what we're hearing too, is just, it's kind of like you said, filling in some of those labor shortage gaps. So are you seeing that kind of play out from the lending side of things?
We are. I mean, ultimately buying a new line to support their product, and obviously make it faster.
Mm-hmm.
So that is a true need.
Yeah.
And the equipment manufacturers that are in a manufacturing setting, CNC machines typically, they're automated, they're all computerized. They now have robotic elements within the CNC machine that companies are always concerned about the time it takes for setup, is what they call it. And The less hands that can be done on a part to move it, to change the access on it, to then machine another side of it. Some of these CNC machines these days are fascinating, number one, and they just allow one person essentially to handle manufacturing a full range of parts or machining a full range of parts without ever having to touch the part. So it's pretty amazing when you walk through a plant, the technology that's come to support that.
Yeah.
Right.
You're giving me flashbacks to like going through a trade show and just seeing the different like robots and cobots out there. And it's that same idea that one person is able to manage all these variety of different tasks with one machine. And so it's really cool to see. Yeah. As far as kind of the clients you work with, are there any sectors of manufacturing in Wisconsin specifically that you're seeing kind of experience a lot of growth? I know you mentioned tool and die, CNC, but are there any others that you're seeing grow? I'll start with you, Dave.
Sure. I think food and beverage is certainly an area. Semiconductors. I think, from my perspective, that is the chip world essentially. We certainly have a shortage of it. Having witnessed it personally, buying a vehicle where it was missing two chips. Crazy as it sounds, but reality. So I think that's something that they're really focused on trying to get back into the U.S. And we certainly have the capabilities here in Wisconsin for that. Some of the other industries, obviously, medical, pharmaceutical, uh,
Mhm.
the medical tools and so forth. That is a growing business at this point. Um, Glenn, I'm not sure if you have any additional areas possibly.
Sure. I mean, you can cover. It's amazing to know that companies exist to do certain things that you would never imagine looking at a final product that you have to go through this. So you have, I mean, plastic injection molding is very popular. Lighter weight type things that used to be, metal produced or can now be done with different materials. So that's a very interesting part of manufacturing as well.
Hmm.
Mhm. Yeah, you touch on a good point. I think in our worlds of working kind of adjacent to manufacturers, you get to learn so much about things that you never really even thought about where it came from. And yeah, it really opens your eyes up to the source of all of that for sure.
Hmm.
What types of expansion are you seeing for manufacturers? I mean, we talked a little bit about automation being at the forefront of manufacturers' minds. Are there any other kind of um, types of loans or types of equipment that manufacturers you see seeking a lot?
I mean, just recently, I was out at a company that does primarily machining and tool and die for the plastic injection mold. So they mold industry. They make the dies that the material is uh, cast into, pumped into to make the part. Um, they invested over $1 million in one machine, and it was the CNC varietal. It gave them a lot of capability to do much larger parts. So when you're talking to businesses in terms of why they're possibly adding a new piece of equipment or two, there's usually there should be a reason why they're doing it. And in this case, it was to expand the size of the dies that they were able to work on, and it gave them a competitive advantage in the marketplace to other smaller shops that weren't able to handle that size of a project. So it kind of goes all over the board depending on what each niche manufacturing company does. But yeah, I would say that it's always very strategic when we have discussions with business owners as to where they see the opportunity. They explain it to us. We, quite frankly, try to poke holes in it because we want to make sure they're making a good decision, and thus it becomes a good decision for us. It's back to that partnership. If those companies are successful, we get paid back on our loans and have deposits in the bank, and we're doing well too. So everybody
Right.
wins.
Everybody wins. Yep. What about you, Dave? Would you add anything to that?
I think the one area that we're still seeing a lot of expansion in is the real estate side of things, whereby people are consolidating locations for efficiency's sake. If they're buying that new piece of equipment, they may not have the space for it or capacity for it. So I think real estate has certainly been an area that is still seeming to be positive, albeit costs are certainly up. And so it really has to make sense for that company to invest in the real
Mhm.
estate side of things.
Yeah,
Hmm.
I don't know about you, Chad, but I feel like I've seen and heard from at least a few of our clients that I can think of opening up new locations or new offices. So, like, I've seen that, I guess, from our side.
I can think of three off the top of my head that in the
Hmm.
last 2 months have talked about buying a building next to them or expanding out their current building just for more space. So yeah, and everything you read about all the commercial real estate doom and gloom on the manufacturing side, it's kind of the opposite, right? They need more space. It's not about people working from home and that sort of stuff. Someone's got to be there and they need room for equipment and all that sort of stuff.
Right.
Hmm.
And we just there was just a report that Glenn had provided me recently for second quarter, just showing the vacancy factor within the real estate market. Waukesha County's at 0.9% vacancy,
Really?
which means that there isn't that available space. So either you're moving around or you're possibly building, which ultimately is an opportunity for us, obviously, from an expansion standpoint with customers.
Yeah, absolutely.
I want to talk a little bit about lending for manufacturers and kind of what National Exchange Bank's approach is. So I'm going to start by just asking what specific needs do manufacturers have that might differ a little bit from other kind of business to business industries? And then as a follow up, kind of how does your lending approach differ? So I'll pass this one to you, Dave.
Sure. So ultimately, from our perspective with manufacturers, one of the major differences, at least from a lending perspective, may be the line of credit and how it's used. In a manufacturing, they would have inventory, whether that's raw material, whether it is WIP, work in progress, or finished goods. With a service industry, they don't have that component typically. So that's probably one of the major differences. And normally that is actually tracked through a borrowing based certificate, which allows us to see what that collateral pool is because it ultimately changes month to month, week to week, and making sure that the loan itself is in formula and so forth. So I think that's one of the major differences between manufacturing and maybe a service industry scenario. But
Sure.
we provide lines of credit, the term loans for their expansion, and as I mentioned earlier, real estate loans. Now, along with that, we do work very closely with the SBA because ultimately there are opportunities where the SBA loan programs are far more beneficial to a customer. That could be from a long-term rate standpoint. It could be from maybe a little bit less collateral per se or capacity. They just need to do a few more things within that loan that a standard or conventional loan may not provide.
And then just to add, the SBA allows a little bit more flexibility. There's really two programs that we utilize most often. It's the 7A program and the SBA 504 program. And as Dave mentioned, the 504 program is for fixed assets, whether it's equipment or their real estate. And a company is able to buy that new piece of equipment, for example, with as little as 10% down. And normally, if they came into the bank, they would look to put 20 or 25% down. And the reason they can do that is because the 504 program is actually the SBA takes a second lien position on that piece of equipment in that example that they're buying, the bank gets a first position, and it's a lot less capital needed to possibly do that expansion with a couple pieces of equipment. Just preserving cash flow is key. It's the lifeblood of the company.
Yeah, definitely seems like it would offer a lot more flexibility and leniency, I guess. Yeah.
Right.
What types of kind of financing options are available to the manufacturers that you serve?
Yeah, as Dave mentioned, we tailor our financing in terms of terms, how much down payment you need, really to work with the company's cash flow. And so, for example, if somebody's putting a new piece of equipment on their floor, it's not going to be operational right away. So we can tailor a loan to be interest only, for example, for 6 months as the employees get up to speed on running it and getting it efficient and producing parts at the level that they want. So that flexibility is really important in talking with our customers about what exactly are you doing with it, how do you see this working from a timing perspective, and then tailoring the financing to help augment the cash flow until that piece of equipment is up and running and producing cash for the company. Um,
Is that type of flexibility something that, and this may just be a no-brainer, but something that NEBAT can offer versus other maybe national or larger banks? Like, is that something unique to you guys to be able to work within what that customer needs?
yeah, I'd like to say we're the only one that does it, but that's not true.
Sure.
But it is a function of um, the our bank is very flat from a management perspective. So we pride ourselves on getting things done very quickly for clients. Hopefully everything's not a fire drill, but we understand things happen, and we're here to serve their needs. So when those instances come up, we like to think out of the box, really sit down with customers, pay attention to their cash flow. We're looking at financials, as Dave said before. I mean, that's really our scorecard that we use to know how the company's performing,
Mhm.
and may have some ideas for them where they may not have thought about an interest-only period on a new piece of equipment. I might have to start principal and interest right away. And if we come to them and say, "Hey, that's an option for you. You don't have to," a lot of people appreciate that we're really thinking about them versus what's in it for us as the bank. So we look at it as a true partnership, and like I said before, if they succeed, we succeed. So
Absolutely.
Awesome.
I think that's one of kind of the advantages of not being one of those larger banks and working with local Wisconsin manufacturers. You have those same roots essentially, and you practice that partnership really well. Do you want to talk a little bit more about kind of the benefits of that, of being a local bank, working with local manufacturers, where there's advantages? I'll start with you, Dave.
Sure. I think the biggest advantage is getting to know somebody. You understand where they're going, what they're doing, why they're doing it. That's not only from one generation to the next. It's obviously as the business continues to grow, we get the opportunity to kind of see the good, bad, and the uglies of any customer or client, which gives us an opportunity to ask questions. And I think as we move forward with any customer, it by knowing them very well and being at their doorstep, so to speak, it provides us an opportunity to see what they're doing, and ultimately then kind of helping them, as Glenn was mentioning, tailoring it to them, building that relationship with them. And I think part of it is the story about them
Mhm.
that you get the opportunity to know, and it puts credence to them.
yeah, and I would add that local decision making is what we do because we are local. We don't have any decision making out of state. We're a Wisconsin based bank. We pretty much stay in Wisconsin. We'll follow customers to do some things out of state from time to time, but it's not the norm. And all companies, whoever's listening to this, going through the Great Recession in 2008 to 2012, 13, they felt the pain of what it was like to not have local people knowledgeable of their company and backing it. Because if you're a publicly traded company, large bank, no offense to our brethren there, but decisions typically aren't made locally. And when there's a downturn and there's challenges, unforeseen events that happen, good luck getting somebody out of state that's never met you to stand behind you and give you the flexibility you need to work through an issue.
Yeah, what
it
a
was
good point.
pretty difficult for a lot of people back then.
Yeah.
Yeah.
And you don't even have to blame your large bank brethren there, as you phrased it. I mean, there's no personal connection there. You've never met the person. You don't want to work extra hard for them if you don't even know who they are.
But it's just it's dealing with a big organization. Everybody's done it on the consumer side. You get put into a loop of phone calls, and
Yeah.
here people have our cell numbers and they can call us anytime they want, and we're going to be responsive to it. So
100%. And I don't. This isn't meant to be a commercial for NEBAT, but I can walk into the branch, over in Pewaukee, and any person that I encounter there knows who I am, which is just, it feels good when you have that happening.
Yeah. And I would just say too, I've been to the Waukesha branch for like my HSA or something like that, and everyone's so nice and so helpful and friendly.
It goes a long way, yeah.
So yeah, it's just a completely different experience, I would say, than some of those other banks.
Now maybe they know my name because I'm just a pain in the ass when I walk in there, but no.
You're a regular?
I like to think it's because I'm friendly.
Yeah, that's awesome. I know we talked a little bit about this before we started recording. I guess I'm going to change my question a little bit. In the manufacturing space, do you more often see kind of companies transitioning from generation to second generation, and how do you, I guess, what's your approach there? Or is that typical since manufacturing is so commonly kind of family owned businesses?
yeah, we see that all the time. I mean, there's obviously transitions that happen all the time. The baby boomer generation, I'm in that camp, and everybody's getting older. You can't avoid it. But anytime we have a client or an opportunity as a referral to get into a family-owned company that's transitioning to that next generation, you really see how they positioned that training for that next generation to take over. And when we see instances where a couple kids have been in the business for 10, 20 years, it's not a hard transition because they've been taught the culture, they know the customers. Those are fairly easy to do, as opposed to somebody saying, "Hey, I want to start up a brand new manufacturing facility." It's very capital intensive. The barriers to entry are tough. You don't have any customers. So not only do we see it on the generational transition of family businesses, but you could have some really sharp folks that are working for somebody and say, "Hey, I'm entrepreneurial. I think I'd like to do this myself." And we see that quite often as well. And they will partner up potentially and look at buying a company that's for sale that isn't getting transitioned to the next generation. And those as well, those are fun discussions too, because there's a lot of excitement that goes on, and capital is at a premium. So that's again where those SBA programs come into play. And you're buying something that has an existing business. It has a customer base. It has a historical track record of earnings that you can feel comfortable as a lender. You have something to underwrite in effect, right? And so that happens quite often as well as the current generation wants to finally sell their business. There's a number of ways to do that.
Anything you would add to that, Dave?
From my perspective, generational changes can be pretty drastic for the company. As Glenn was saying, it depends on how long they've been there. It depends on why the transition has occurred. Unfortunately, we've seen where the second generation is thrust into the business by accident, so to speak, and or by some tragic event. And those are always difficult as well. But I think it's an opportunity for us to ask questions, understand what they're doing, and understand where they're headed to help them the best way we can. We have seen transitional where it is more of an employee base that wants to buy the business rather than family members taking on. Oftentimes, they may be minority owners where they're growing into it, or they're having the transition occurring because the owner does not have children or that next generation, which provides opportunities for them. So really trying to figure out what they're doing. And then ultimately, again, we keep saying it, tailoring the loan program to what their needs are, what their capacity is. And that oftentimes can relate to the SBA side of things because it helps from different program scenarios. So I think it really just depends on what that customer is looking to do.
Yeah. I think kind of going back to, I think Glenn, you said this a little bit earlier, but going back to the poking holes a little bit at first in those transitions and just making sure that it's viable, essentially. I'm sure that's critical. Yeah.
Yeah, absolutely. I mean, when you build that kind of relationship, um, you know, my customers aren't gonna think that I'm doing it for any other reason but for their best interest. And so it's that's that consulting type of approach where I want to make sure they've thought through everything for their own good, and not that I'm the expert, but we just we have the benefit, Dave and I have the benefit of working with a lot of different companies over a long career. We've kind of seen a lot. Doesn't mean we're running your business by any means, but we've seen enough to know where there's some pitfalls. And with somebody running their own company or somebody taking over, they haven't seen it all yet, perhaps. So we just want to do it from just to make very, very sound and good business decisions at the end of the day is all we're trying to do.
Mm-hmm. Yeah. I think that's a testament again to being a local bank. You have that ability to kind of, yeah, I guess you want them to succeed. They're not just, in a bucket, in a category that you don't interact. You want both parties to be successful in the endeavor. So that makes sense. As far as kind of watching the success or seeing the success of a loan play out, what does that look like on your end? I'll start with you, Dave.
So any loan from our perspective is, whether it's the equipment, the real estate, what have you, it's what basically is driving the success of the business within their financials. As Glenn had mentioned, we're cash flow lenders, right? So we're really looking at their financial success, building balance sheets, having a profitable business. And those are the metrics that we're typically looking at to see whether that next piece of equipment has been successful or whether their sales group is doing the right things. What are their weaknesses? What are their strengths in the marketplace itself, reputational as much as anything? I think there's a lot of different things that come into what the success looks like, and every business is a little bit different.
Mm-hmm.
I think that depending on the industries, there can be a significant difference in gross profits or net income. Some much skinnier than others, depending on how competitive each market is. So I think as we kind of dig in, I think the questions are many. We like to ask questions. We're inquisitive. But again, part of that is really to understand them as much as it is to poke the holes in, so to speak.
Mm-hmm. Absolutely. What would you add to that, Glenn?
Yeah, I would just say that Again, depending on the sophistication level of the company and their financial side of the company, whether they have a controller or a CFO type of individual, or are just relying with the partnership they have with their accounting firm. If there's a bigger, larger event that's requiring some financing, whether it be a new piece of equipment, a new expansion with another facility, for example, we're typically going to ask for projections, financial projections that are going to allow us at least to understand what they think is the roadmap to success for making that business decision. And so, it's basically following along. Ultimately, like I said before, the financial statements are the scorecard and for the company, and everybody wants to be as profitable as they possibly can and be as competitive in the market as they can accordingly. So a lot of times, that's what we'll do is they'll go through that exercise and really put pencil to paper in terms of what they believe is going to happen in the future, and we buy into it or we don't, and we track it along the way. Banking is a heavily regulated industry, so we can't just do things off the cuff. But we can be flexible at the same time. So,
Yeah, definitely. So it's ultimately up to them to obviously uphold kind of their end of things, and you probably don't interact with their sales and marketing teams very often, if at all. But do you ever see maybe their sales and marketing play out? Like, for example, they buy a new piece of equipment that allows them to like expand a certain product line or promote something new. Do you ever kind of watch that or see that play out through, I don't know, places like LinkedIn or anything like that?
I think it's more that just constant communication. I mean, we're typically out seeing customers on a quarterly basis. It depends, but quarterly, semi-annual, especially if there's an event like that going on, and it's really sitting across the table and hearing from them, are things going according to how they thought they would? And clearly, one of the main, an important question that we ask when we're learning about a company, if we get referred into a new opportunity with a company and we're meeting them for the first time, certainly that sales process and their team is a important question that we're asking. How do you market your product? What does your sales team look like? How do you make that happen? It's an important piece of the overall inner workings of the company.
Mm-hmm. And I know you already answered this before we started recording, but I'm going to ask you again so everyone else can hear too. But as far as things like costs for like campaigns or costs for like marketing collateral kinds of things, that's not typically something that would come out of like a manufacturing type of loan, correct?
That's correct. I mean, typically, from our perspective, those are operating expenses. They wouldn't normally be rolled into an overall project scenario. But I do think that there are times where ultimately you could have a project scenario where there may be that marketing component to it, and ultimately might be a built in. But primarily, it would be coming out of operating expenses and so forth.
And I would add an example where a company would has a desire to get into a new market or a new region that they hadn't before, and they've got to add salespeople, and the that costs money, right? And you're not going to see the fruits of your labor up front. You're going to probably see it later. So that would probably most often we would see that maybe in a request to increase the level of their line of credit, for example, because they may be burning some money up front for those upfront costs, but feel that they will recoup it in spades later on and be able to pay that line back down again with the cash flow generated from those salespeople.
Yeah,
Makes sense.
makes sense. We are almost through with all of my questions. I have one big one to ask, which is from where you stand in the relationships you have with your clients, or just even what you're seeing out in the world, what is kind of the most exciting thing happening in manufacturing today? I'll start with you, Dave.
Sure. I think the biggest thing to me is watching the evolution of whether it is the automation side of things, whether it is the AI side of things, and I think that's just starting out and certainly will continue to evolve. Um, Being on the older side, I guess to me those are things that sometimes you don't quite understand, and it's great to learn from and see as it evolves in the manufacturing space. So I think those are the exciting things. But overall, I think the market is good, and we help our customers the best we can.
Absolutely. What about you, Glenn?
I think it's that evolution of the technology that's out there with new equipment. You talk to pretty much any business owner in the manufacturing sector today, and I would think the top three challenges, one of them is going to be the labor. Younger people not getting into the trades, so they're always looking to maintain their level of expertise in their workforce. So that's a challenge on one hand, but like we had talked about before, when technology is addressing that and is making a machine cell where one or two people can now do what it used to take three or four people to do, that's pretty exciting because that's efficiency, that's making money. That's why people are in business at the end of the day. And so that's probably one of the more exciting things to address a challenge that is pretty much any manufacturer will tell you they've been dealing with for at least the last few years, especially with COVID and everything else. So, yeah.
Yeah, we just recorded a separate podcast episode, and this very same topic pretty much came up where it's a challenge, but it's kind of forced manufacturing to push forward, especially with that automation piece. I think realizing that it's maybe, the next generation isn't quite there yet or doesn't know how cool manufacturing can be. I think those new technologies can make it a much more exciting place to work. And it's kind of attracting some, new people to the industry, which I think is really cool too.
I would just add that it is exciting to see the manufacturers actually taking the bull by the horns and getting involved with different tech education, the MATCs of the world and WCTCs of the world to have partnerships that are put together where they'll bring kids in from high school. I know I had one manufacturer where they love getting people in early, and as long as they're willing to come to work and work hard and learn, that could be a really nice avenue for them from a career standpoint. And the businesses have had to be proactive in trying to figure that dilemma out, and seeing that happen and that partnership between the education side of things and the companies has been fun to watch.
Yeah, I think it really proves like the adaptability of the industry, even though it seems like setbacks. But like you said, manufacturers are really taking the opportunity to do things like apprenticeship programs, working with students, or investing in the right equipment. It's kind of forcing them to be proactive and move forward essentially. So. Those are all of the questions that I have for you two today. I really appreciate you joining us for this episode. I certainly learned a lot. But yeah, thank you so much.
Well, thank you for
Thanks so much
having
for
us.
having us.
Yeah, thanks, guys.
Bye.